Hello. Welcome to my channel, my dear friends. My name is Abhilash, I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. And my dear friends, today is Friday. So do not fry your account. Be careful because for the last couple of months, the Fridays have been dangerous. We get to see some unexpected, illogical moves in the market because see everything happens for a reason in market. But when Friday comes, we see a lot of profit booking sometimes. So there are some unexpected moves. So be careful. Do not fry your account today. During the US session, especially if you see some crazy moves in the market and if you fail to find logic, then just take risk. Spend some quality time with your friends and family. They deserve your time too. Because if you trade on a crazy market that you fail to understand, okay, then there's a high chance that you will lose money. So when market will be normal again next week, you can jump again because you are a trader, not a gambler. Uh, do not get carried away with the big candles. Do not forget, at the time of news, most of the traders lose money. Okay, and if we look at the economic calendar, we can see that today we have a long list of events, especially for US dollar also. Okay, we have two, three news coming up. Not a major event that can change the direction of the market, but they will bring a lot of volatility, lot of spikes. So be careful. Do not fry your account. I'm repeating. Okay. And if you look at the forex sentiment meter, we can see that on the forex sentiment meter, um, here is a beloved goal, and we can see that forex sentiment meter is also a little confused right now. The sentiment meter shows the position of the retail traders, and most of the time, not most of the, almost all the time, we see market moving against the forex sentiment meter. But now we can see that retail traders are also confused regarding the next direction. And if we look at the market sentiment, um, gold edges higher on safe haven demand. Trump tariff worries set gold on course for 8 straight weekly gains. So the safe haven market sentiment is still dominating gold as of now. Okay, and this is our beloved hourly chart of gold in front of us. Why beloved? Because 1 hour chart is not too fast and not very slow like 4 hours chart. It's just falls in between, and I think if you are struggling with the market right now, if you see if your positions are not going well, I think you should trade with 1 hour chart only. Instead of looking for too many positions on 5 minutes or 15 minutes time frame, you should uh, look for stability, and hourly time frame is the best time frame. You may only find 2 or 3 trades in a trade, but those will be good ones. So these are the levels for a day, and we can see that we do not have any major changes. Okay, the levels that we discussed yesterday are still very much valid, and the trend of the market is still very much bullish. So during the US session, if market drops also, my dear friends, during the US session, if market drops also, obviously you can go for a sell position as a day trader. Okay, because it will be a temporary correction. It will just be a profit booking for any trend reversal of $100, $200, $300 move. If you're still hoping for a trend reversal of gold up to 2500, 2400, okay, we need a huge fundamental reason, or we need a big news, and right now we don't have that. So if any selling pressure comes also during the US session on today, okay, it will just be a profit booking or correction. And obviously, we need a correction right now because those traders who have been looking for a good position to grab gold and hold for a couple of days, okay, they are still waiting. Personally, I am also waiting for a proper replacement or correction because market is standing at the top right now, and this is not the ideal position to go for a long position. So whatever we do, okay, we can just go for day trades because nobody knows from where the market will reverse. Obviously, the market will reverse at one point, but nobody knows the correct point. Still, we are hoping that market won't be able to break 3000 level. So around 2000, 2980, 2990, we can expect a reversal. But as of now, market is bullish and we cannot deny it. Okay, so still we are looking for buy positions only. So let's understand them one by one. The levels that we discussed yesterday, for example, the level of 291614 is still very much valid as the first support. But keep in mind, as market has already bounced, okay, listen to me carefully. As market has already bounced from 2919 yesterday, so 2916 is a weak level. And there's a high chance that if market is little volatile, it will not work at all. Yesterday it was a good level, but market has already bounced from 2919 2920 area. So if market forms a lower low, then there's a high chance that it will not work much. So if you see gold is coming down with low volume, then only you can expect a bounce around 291614 area. Okay, during US session it will not work, I think. Then we have the second support around 2907. 2905, we discussed about it yesterday also. It was a FEBO level plus the previous resistance will be working as support. So 290705 seems to be a good level till now. So we can expect that if market drops also, okay, market should get some support around this area. And the other levels like 2892, the 2888, then 287775. Okay, these two levels are still very much valid, but right now I don't think so. Okay, we need to talk about 2892 to 888, sorry, 2877 area, because chances of market coming down or going below 2900 is less. So let's focus on the immediate levels like 291614 and 290705 area only. During the day, if you see market coming down with low volume, this is the support. We can look for a buy. Otherwise, 290705. Just okay, do not place positions blindly, because if you see the market is showing heavy selling pressure, because today's Friday, market may go for profit booking traders. Okay, if you see that there's a big red candle, then obviously you need to have what, use your common sense. Okay, and if market goes up, we can look for a buy above 2957 also, but keep in mind, okay, the upside may not be a big one, just like yesterday or day before yesterday, after 40 to 50 pips. Okay, after 40 to 50 pips, you may see that gold is struggling. In that case, you can exit, and what you can do is, when market will be coming down again, the previous resistance will become the new support. Okay, then you can enter. So when market will be taking support around 2955 2953 area, then you can expect that, okay, the previous resistance has become the new support, let's buy again. So what we have been doing for the last couple of weeks, the previous, okay, see, no market goes up in a straight line, no market goes down in a straight line. Market will come for some retracement. So when the previous resistance will become the new support, then you can also buy. And still the trend of the market is bullish, no news about trend reversal, so buying at retracement is still the best trading strategy. But as today is Friday, we may see some profit booking during the US session. If you're a day trader, scalper, if you see some heavy selling pressure, then you can just follow the trend of the market. And if you're a new trader, beginner, fail to find any logic, just shut down the laptop, do not watch the charts, and start trading on Monday again. One thing I would like to add here is that many people, okay, do not like to watch the hourly chart. They prefer 5 minutes chart or 15 minutes chart. You need to keep in mind that you are here to make money, not to take too many trades. Okay, you are here to make money for yourself, not for the broker. If you get one good trade also a day, that is enough. If you get two or three good trades, not good, two or three good trades in a week also, they are good enough. You should be targeting in the number of pips. For example, if you have, let's say your weekly target is 200 pips. Okay, so your weekly target is 200 pips. To achieve the target of 200 pips, okay, you can take two trades also. Okay, two good trades of 200 pips. Okay, in a trending market like this, one good trade is also enough, isn't it? So it doesn't matter, okay, whether you take one trade or two trade. Okay, achieving the target is important, but the problem arises, okay, when we take 20 to 25 trades. The more you trade, there's a higher chance of losing money, because you will be tending to make more mistakes. So the main reason why people fail, okay, to achieve the target is that, okay, they are always stuck in a loop. Because today in 5 trades you are making money, today in 7 trades you are losing money, so you're trying to recover the capital. Okay, so you forget about achieving the money, so you're always trying to keep the capital safe, you're trying to recover the capital, so you're always stuck in a loop. So of your target should be quality trades, not quantity trades. Okay, so okay, I won't drag the video longer. Okay, sorry. That's all from my side, my friends. Thank you so much. Bye bye. Take care.